Inflation is here to stay. It is here to stay. I think people are kind of waking up that inflation is here. And the problem with inflation, this is my personal thing about it, it makes the rich richer, but it makes the poor poor. I mean, literally poor. And then the middle class gets hit the hardest. And revolution starts when the poor can't survive. Because, you know, like when you go to the store and a piece of celery is $20, and today it's oil and all this. So the question today is, what do you do? How do you hedge against what's coming? Because when Biden, when cut off the XL pipeline, the price of oil went through the roof. I was buying oil at $30 a barrel, or I was selling oil at $30 a barrel, and then it went to $130 a barrel. But it wipes out everybody else. And so, ladies and gentlemen, this is not a political show. We're not CNN, and we're definitely not Fox.
If you're not paying attention, if you're still riding the default mode, you gotta start listening to the Rich Dad radio show, listen to the Jay Martin show. It's time to start paying attention and taking control, because exactly what you just said, right? If we thought consumer inflation has been bad and caused, disgruntled civil unrest, just wait until we see food and fuel riots in the streets. But, I mean, this is, I think the rest of the 2020s will be like the first 2 years of the 2020s, right? Unprecedented is the new precedented, and this is just getting started.
Correct. And we both have some really stellar leaders. You have Trudeau and we have Biden. I mean, when Biden is in charge and the way the dollar is set up, the dollar always loses money. It's called Triffin's dilemma. If you're the reserve currency of the world, the dollar always loses value because debt always goes up. So the Fed has to keep printing, the Treasury has to keep printing. And that's why if you read Rich Dad, Poor Dad, which came out 25 years ago, it said the rich don't work for money, rich don't save money, because the dollar is fake. The US dollar is fake. All currencies are fake. So people talk about, the euro's getting stronger. To me, it's all bullshit. And if you understand how the dollar is created, you'd be at Vancouver, because 1944, the US dollar became the reserve currency of the world. What that is a thing called Triffin's dilemma. That means we're always short of dollars, so they have to keep printing. And they'll always print. The system is flawed. So exactly as Jay Martin said, this is our time.
We've been dealing with much higher than expected inflation numbers, for a long time. All of last year, all of 2021, long before Putin invaded the Ukraine, prices kept going up month after month, more than expected, and the Fed kept saying, don't worry about it, it's transitory, it'll go away on its own. And in fact, the Fed was finally forced to reluctantly admit that inflation wasn't transitory, and all this happened before Putin invaded the Ukraine. And by the way, even if you're going to try to blame some inflation on the invasion, it's more the sanctions that are affecting prices than the invasion itself. Not that I'm saying that we should condone the invasion, but we also have to accept the responsibility that the U.S. is leading the charge on these sanctions, and it may be the sanctions that have more to do with it than the invasion itself. But I think neither is the culprit. It's all the Federal Reserve and the U.S. government. It's Congress, it's the Biden administration that has been spending money that it was not collecting in taxes. We were running record budget deficits, and the Federal Reserve was monetizing those deficits. We were printing all this money, and the government was spending it. We told people not to go to work, not to be productive, don't help make stuff, don't provide services, but here's a bunch of money to go out and spend. We want you buying stuff even though you're not making stuff. And so we flooded the country with money. At the same time, the production of goods and services slowed down. And of course, prices went up. It's not a surprise. It's exactly what I was saying was going to happen when they first went down this misguided path. And so we're simply reaping the whirlwind of the wind that we sowed. The sheer volume of goods coming into the United States is at an all-time record high. So we've never had so much stuff coming into the country as we have right now. The problem is we printed even more money. And that's why everybody is, chasing all this stuff. So the problem isn't a lack of stuff. It's a surplus of money. Because the government can print money, but they can't print stuff. So if they keep printing money, clearly prices have to go up because there's nothing to buy with the money they print. We're higher than where it was when it supposedly peaked, but it's as peaked as it was transitory, and there's no reason to believe that it's peaked. Think about where interest rates are. Even though the Fed is talking about raising them, they're still at 25 basis points, 0.25%. The last time inflation was this high in 1981, interest rates were at 20%. So wow. we're not even close to 1%, let alone 20%. So inflation is not coming to an end like it was in 1981. It's just getting started. This is like 1971, not like 1981. We have a long way to go. We're not even close to the peak of inflation. The interest rate should be above the inflation rate. People aren't lending money to lose on purpose. You have to have a real return that exceeds the rate of inflation. And, we're not even close to that. But the reason that the Fed is not raising rates significantly to fight inflation is because it can't do it, because we all have so much debt. But the reason we have so much debt is because the Fed could never raise rates in the past, because every time they tried, the economy would go into recession, the markets would tank, and then it'd have to go right back down to zero and do a bunch more quantitative easing. So the economy gets more and more addicted to cheap money every time we get a bigger dose. And now they're claiming that we can go cold turkey on the cheap money and nothing's going to happen. I mean, the economy has never been more vulnerable to a rise in interest rates than it is right now. And we've never had more inflation than we do right now. So higher interest rates have never been more necessary than they are right now. But we can't get them without collapsing the economy. So we won't get them. We'll have massive inflation instead, which will do even more damage to the economy than a collapse. Not only do they have to raise interest rates, they have to dramatically reduce the money supply. They have to reverse all this quantitative easing. They have a $9 trillion balance sheet. But what quantitative easing really is debt monetization. That's when a central bank, the Federal Reserve, prints up money and buys government bonds. And so they put new money into circulation. They are inflating the money supply. That is the very essence of inflation. Whenever the central bank says we're doing quantitative easing, what you should actually think they're saying is we are causing inflation. And that is what they did. And the consequence of that is that we're all paying higher prices. But if they want to get rid of the inflation, they have to shrink that money supply. So they have to do the opposite of quantitative easing, quantitative tightening. They've got to sell U.S. government bonds and then take the money they get and destroy it so that the money supply goes down. The problem is, who is going to buy all these government bonds? Because up until recently, the Federal Reserve was the biggest customer of the United States government, because the Federal Reserve was the biggest buyer of treasuries, helping to finance the deficit. Well, if the Fed goes from being the Treasury's biggest customer to their biggest competitor, if the Federal Reserve is competing with the government selling treasuries into the market, who is going to buy all these treasuries, and where is the money going to come from? The answer is no one's going to buy them. The price has to collapse. That's why interest rates are rising every single day. We just hit 2.9% today on a 30-year, 2.8% on a 10-year. These are the highest rates have been since COVID, but they're going up every day because nobody wants to buy treasuries. So every day, more and more treasuries get sold. Rates are going to keep going up until eventually the markets crash, and then the Fed is forced to pivot on its stance and go back to, we can't hike rates, we can't shrink our balance sheet. And that's when inflation can really kick into a higher gear. As bad as it is now, it's going to get much worse.